Rohr here with a somewhat belated early global view on Tuesday, September 29th, 2015. It's currently 9:35 a.m. And the reason we waited was amidst what was improving data, but a weak equities market, we wanted to see the full impact of the U.S. consumer confidence figures that were released at 9 o'clock Central Time today. And we'll get back to that momentarily, but as you can see from the market action, it was a constructive figure that helped stem an early sell-off. So what has all this meant to the markets? Well, once again, some of these macro concerns weighed on the S&P yesterday. You can see it's currently trading at 1882.70 so far today, up just about $10 from yesterday's close on Monday. However, it was up at about 1885 overnight, and then right into the opening slipped only a several dollar higher opening, and then the market got put under pressure for a minor new low. But what was the next significant support level below 1895 to 1900? 1866, which is interesting because after holding a previous test off to the left on this chart, and actually holding the test going back, pardon me, to last Thursday, was under pressure from, into Yellen's speech before she came in positive, and then kind of capitulating on Friday to head back down, yesterday morning being weak again, below 1900 to 1895, was a sign that it was finally ready to give that up, and the next interim relatively significant support is 1866, and it's so important this held. And this is why we waited for consumer confidence today to make sure it wasn't a really nasty number that would empower the bears to knock this out, because the next support below it is down around the 1830 lead contract trading low and significant Fibonacci support that the market hit on the debacle back on August 24th on the Chinese currency move on that Monday. Where's the resistance? Well, nominally on congestion, back up at 1895 to 1900. Now, the overall trend channel looks like it's all the way up here at 1920, but we have a feeling the market isn't getting there right away. After these sharp sell-offs, markets often consolidate for a day or two, and indeed, 1895 to 1900 will become very important again out into the early part of the day on Thursday. And that's going to be extremely critical as to whether it's maintaining its overall downtrend, or if it can get back above 1900 to 1895, whether it might be breaking up and clawing its way back into the higher range. And that pretty much does it for the short-term view of the S&P 500.